My name is Sophie Robinson-Tillett. I'm the Deputy Editor of ResponsibleInvestor.com, and I'm going to be moderating this panel on the just transition. Before I introduce our veteran panelists, I'm going to just try and anchor this in something a bit real, because the just transition is quite a big concept, but it's already something that we've kind of seen historically before. So I'm going to very quickly, if I may, get a bit Dickensian on you all and go for a tale of two cities here. One of them is appropriately the European Commission's Green Capital of 2017, Essen in Germany, which I'm probably pronouncing wrong, but as a coal hub in Germany, which saw the industrial decline that many Western coal hubs did in the 1980s and lost an awful lot of jobs, was left with dirty water, dirty air, and not a huge amount else industrially. It managed to retain some of its utilities. It also cleaned up its waterways, and they became the basis of a relatively blossoming tourist industry. It turned one of its coal mines into a UNESCO World Heritage Site, complete with, and I wish I'd brought a slide, a massive Ferris wheel. So, you know, it used some innovation to do those things. It also, the local government's trying to encourage its students from its two universities to stay and foster a bit of entrepreneurship by giving rent subsidies for startups. So it won the European Capital of Culture, and it's also the Green Capital of 2017. 850 kilometres that way in the UK, where I'm from. The Welsh Valleys was similarly synonymous with the mining industry and had a similar kind of decline, and the result now of that transition has been very different. It's the highest poverty rates in the UK, half the job count per head of the national average, twice the health problems of the national average, and perhaps unsurprisingly, they were one of the constituencies that voted more strongly than the national average to leave the European Union, despite the fact that they received quite a lot of support financially from the EU because of their situation. So there we have it kind of in a concrete form. There's a transition that's taken place, two places, exactly the same challenges, managed in very different ways, and we can see that there is political backlash and stranded communities as a result of that. So to look at how we avoid that going forward, I'd like to introduce my panel, if I may, starting on the end with Sharan Burrows, who's the head of the International Trade Union Confederation, which has its own Just Transition Centre within it. Sharan has to leave a bit early because of our overrunning, so she will leave partway through the panel. Please don't think she's done a runner, because we're talking about boring things or anything like that. That's just the timing issue there. And then we've got Andrea Baranes, who's the president of the Ethical Finance Foundation in Italy. We've got Anne-Catherine Husson-Traore, and I'm sorry, I'm English, we're rubbish, who's the CEO of France-based NGO, or ESG research house, sorry, not NGO, ESG research house, Novethic, and also a member of the European Commission high-level expert group on sustainable finance. And we have another member of HLEG, Myriam Vander, who's a senior researcher at Dutch NGO SOMO. So I will hand over first, if I may, to Sharan to just give us a bit more of an overview of the just transition and what it means.
Thank you. Thanks for the tech help. So, first of all, thank you very much for having this conversation. It's urgent and it's absolutely essential if we're going to build trust in communities for the massive industrial transformation that we certainly know we face. The second thing is I really apologise. I did say I could do 11 till 12, but I'll push it a little, but I'll have to be at my next appointment. So I'm not being rude, and I hate being so precious. So thank you, Sophie. First of all, let me say that for the trade unions, just transition is fundamental. I call myself a climate warrior. As head of the Australian Council of Trade Unions, before I took on this job, I brought the whole of the Australian labour movement behind then a 2-degree scenario. I negotiated what was a failed attempt, but it was a good carbon pricing scheme, carbon trading scheme in Australia with good community allies and government in 2008. And of course, we've had 2 goes in Australia, but with a Conservative government, we are still lagging way behind. But when I took on this job in 2010, we'd already been fighting for around 8 years for just transition in what was to be the Copenhagen Conference Prize, and then, of course, the Paris Agreement. We got it in. Now we have to make it a reality. Why? What's this odd beast called just transition, given the urgency of getting to zero carbon future? Well, it's about trust. We've had many transitions before in labour markets, and to be honest, people talk about technology. We've dealt with technology relatively well. Not always, but relatively well. We've used technology integration in the workplace to upskill workers and to provide higher wages, and to date it's delivered mostly more jobs. However, the reality now is not only do we face the climate challenge, that's enough, and that's what we fought for just transition for. We face labour market disruptions that are crossing climate, demographics, technology across a broad range. People talk about digitalisation. My bigger fear, frankly, is the future of production. And of course, there are big ethical debates on artificial intelligence. But what all this delivers, with a fractured world around conflict, and indeed, frankly, just a total lack of government leadership, absent 3 or 4 cases in the world, it absolutely says to people, be fearful. We've done the polling. Overwhelmingly, people in the world support climate action. They know the world would be a better place if, in fact, governments acted together. They're not frightened of technology, but across all of these fronts, they are deeply, deeply anxious about their jobs. And we predicted about 3 years ago, actually, and I saw it first in Germany, where I never thought I'd see it, because at least they have a social dialogue tradition. But we predicted community wars, and I used to say to my team, welcome to my nightmare, and I'd give presentations around the conflict, not just in families around jobs as workers were displaced, but indeed across communities and across stakeholder groups who are otherwise friends. So I want to say congratulations to and thank you, deep thank you to our NGO partners, and indeed many of the finance NGOs who have actually trusted us enough to understand that we are for climate, we are for carbon pricing. I was on the board of the Asset Owners Disclosure Project. We are definitely about disclosure, and while the FFB principles get us part of the way, we want mandatory disclosure. So, you know, it's not always easy for our broad church of a constituency, but you can take it as read. These are our policy settings, and leaders fight for them every day. What we don't have, though, is the urgency of planning. So we got it in the Paris Agreement in 2015, and that year we also got the SDGs. People say, what's the relevance? We say this is a promise of a zero poverty, zero carbon world. But are our governments fit for purpose around the sense of urgency and the commitment and the direction of financing and public policy and regulation? No, you know that better than me. So what do we have to do about it? We have to make sure that where we can use leverage to shift the agenda, we do. We have $30 trillion of workers' capital, pension funds invested in the global economy. If you add up the mutuals we've built across banks and building societies and health societies, depending on the system, and other measures, we have almost double that. So we are, it's a technical term, but pretty pissed off with the investment community. You know, I'm Australian. I could say worse things, but I'm Europeanising my language today. But the truth is, they're still acting on a lemming standard most of the time. They're buying the list. The risk of stranded assets is enormous, you know that, but so too is the risk of stranded workers and stranded communities. So we have to act collectively to demand new investment principles. Actually, they're not so new. We just want to make sure that they're adhered to. And they are, in fact, for us, very simple, high-level, very simple principles. The first one, of course, is disclosure. We want to know where our money's invested. The real asset owners, by the way, are not the funds, they're the workers in terms of our capital. And so we want to know where the money is being invested. That's a discussion all in itself for people who want a dignified retirement income but don't want their money actually, helping to do things that are debasing humanity or indeed the planet. Secondly, we want to know that fundamental rights, UN guidelines on business and human rights must be adhered to. That means fundamentally human rights, freedom of association, the right to organise. That if companies aren't respectful of that, our money shouldn't be investing in them. The third one is we want a plan consistent. These are written in slightly more technical language, but the third one is we want a plan consistent with the Paris Climate Agreement. That doesn't mean just 2 degrees, it means as far below as possible. And in that context, we also want to see that that plan includes just transition measures and that every company that's invested in is either a start-up, new company doing good, or it is indeed a company in transition. We have a slight nuance division with the divestment community. We're certainly not opposed to divestment, but we say don't do it as a first step. If you've got big utilities companies, big energy companies, then demand that they transition, because otherwise we'll have economic and people instability, community instability that you can't leap over, and again it breaks the momentum. So don't give them forever, that's not on the cards, but before we actually pull the plug on investment, let's see if we can get the reform that's necessary to transition these corporations. Now some you won't, and we will be right behind the divestment push, but we just want our investors to demand those things. And one last one, and it's to take responsibility for the communities in which you have actually built your livelihood, your profits, and indeed have served you well, but are dependent on you. So 2 final things I would say, Sophie. The first is that what are just transition measures? They're really easy. Got to be delivered through dialogue. And indeed, they are about, for older workers, guaranteed pensions. You could actually close down every coal mine in America with about a rule of thumb, $10 billion in pension funds guaranteed. Instead, what are the companies who've actually negotiated those pension funds doing? Stripping the assets, hanging on, often using Chapter 11 bankruptcies. It's criminal. So coal's ended. But the real question about coal is that if you think about a company that is a good company, no company's perfect. Even the ones I work with that are, human rights advocates will tell you they're not perfect. But what we want is the will to actually do the due diligence, have the grievance procedures, and make sure that we can effect remedy. So if you take a company like Enel out of Italy, it actually has an agreement with its Italian unions on just transition. It is working with us and our industrial on a global, I'm pulling that into a global framework agreement, and its procurement principles aren't bad globally. But if you look at their challenge and the deficits for the moment, they have to close 23 power stations, coal-fired power stations, in under 7 years. It is hard for us to explain to our environmental agencies, NGO friends, that's not easy. I just spent 6 years backing in a community campaign in Port Augusta, a little community in my own country, that now has transitioned from coal-fired power station to solar thermal, but we blew it by 1 year. We didn't get the transition exactly right. Nevertheless, that community will live, and it's a good outcome. But I can tell you the blood, sweat and tears to get everybody aligned behind that. This company will do it. They take responsibility for the community as well as for the workers, but it's a massive enterprise, and I want people to understand that. Now, you would never divest from Enel, even though we're having an argument with them right now about their startups in renewables, because they're not equivalent jobs. But we can have the dialogue, we'll get that right. Sadly, it's in the US. We say the US Chamber of Commerce is our #1 enemy because, in fact, they don't agree with human rights and freedom of association, bargaining in particular. But we'll win that fight with good companies. So just transition measures are simply about pensions for older workers, skills and redeployment for younger workers, investment in the communities in which they leave behind, And I don't have time, or I'd read you something from one of our absolute kind of heroes out there, a guy called Ken Smith. He went through a transition in a town called Bathurst in Canada, and indeed they did very well for the workers, but the community's devastated. He's now in the tar sands in Fort McMurray, and what Ken says is this time, he doesn't walk away from it, this time we have to get it right. We cannot walk away from our community, even as we have the strength of unions to do good for workers. So it's an enormous challenge, and I can tell you there's only a handful, 3 governments, there's only 2 agreements in the world now about an exit plan from coal. 2, despite the urgency, 2. One is the Netherlands, don't have much coal, you can give that a tick, but the second one is a province of Canada, the Alberta, and with the Alberta Federation of Labor. It's a good agreement, has all the measures. The Canadian government just 2 weeks ago reaffirmed their intention to dialogue. Germany's talking to its people. I think we'll get some movement in Italy, but I tell you, you know, we have till 2025 to get out of coal effectively, and it's got to diminish rapidly in that point. We're not blind to that, and I'm one of the few people that walks the coal mine communities and the power station communities and tells people it's over, and it's painful. These are good people, good unions, built their communities. I'm telling you, I've cried with them, I've sat there and been angry about it, but there is no future in coal. But if we don't get plans now at every level, with the government, with industry, and with communities, then what are we going to do about the next big challenge, which isn't so far behind fossil fuels? And of course, what are we going to do generally about the whole broken model of globalisation? So we need you on the team. Just transition isn't just a word, it is about, and it's about some radical stuff. Like I also argue in terms of global commons with, I'm not an environmentalist in technical terms, but it worries me enormously that if, 1 in 6 molecules of oxygen comes from the forests of the world, and that's our commons, our lungs, then why aren't we paying the indigenous people of the Amazon and the Chaco forests and others to manage those forests, to map biodiversity? The world's 3 times richer than it was 30 years ago, and yet people are poorer, they're fearful of their jobs. We've got a lot of work to do.
Thank you, Sharan. That's a useful... And I think it's particularly helpful to get some concrete examples of governments that are working on this and companies that are looking at it too. Can I bring in Anne-Catherine here to talk a little bit more about the private sector role around the just transition and why this is so important from an investor perspective as well?
Oh, thank you.
I will do my best, but it's really difficult to talk after you because you said the main and the most important thing. There is a possibility with the ESG analysis or perspective to really bring together environmental and social issues, but we really have this vision is really confronted with strong pushback because, as far you know, we always, and all the lobbyists are saying environmental issues are against social issues because to summarize, if we do good for environment, we do bad for social jobs, for social because we cut jobs, and that's really an issue. You really describe the kind of world we have to work, but you also say that there is just 2 agreements and just maybe Enel who have this...
there's a few more.
A few more, but really a few which have this conversation. And the point is really how, and that's the kind of things brought by ESG analysis, how companies are doing now to plan or to have the strategy related to this very, very quick change. If we take the car industry, because in the energy sector is really on his way, and especially for coal, but the car industry is still thinking, and the leaders of the car industry are still thinking that they could go on to sell to people, to have some strong sales on with diesel cars or others, and their model is not really changing in that way. But They already have cut a lot of jobs, and they will go on. And we have very concrete example with for example, the French automotive Peugeot. As far you know, he was one of the champions of diesel, and we had Dieselgate, and we have now people understood the risk on their health about diesel cars. So the market is really changing very quick. And we have this kind of issue because it's a business issue. If the market is changing so fast, it's not, you have not the capacity of the adaptation. And I have a very concrete example for Peugeot. Now they sold some petrol cars, but they don't have the motorization for that. It's coming from China. Because so the European guys or consumers want petrol, we hope electric cars, but more petrol than diesel. They don't have it, so they import Chinese motorization and it's Chinese job. We don't know how far, how long, but it's really an issue. And we, if we succeed to mainstream sustainable finance, it means that we succeed, and that's one of our goals among HLEG, to succeed to bring this ESG perspective. It means to bring a global picture, because all the things done linked to globalization and linked to the kind of development we had since the last 30, but maybe 50 years, it's related to the fragmentation of production, of everything. But the consequences of all this way of this kind of production are not fragmented. They are all global. Climate change, the problem with the collapse of the natural resources, the social issues, the digitalization, which is really an issue for many jobs. All these things are really related, and we need to have kind of companies who are ready to face it, and we have very, very few of them. So the question, and it's an issue for our work also as HLEG, is to have the kind of recommendation who can bring these companies to have some strategy adapt on their environmental and social issues. And at that time, we just have a very few companies which leads this way since years, but we have really a problem with all the other ones who are staying on the river, in front of the river, and to say, okay, we have to wait that the government, the regulation, and everything will be ready to act, and we have to push them to go faster.
Thank you. I think there's clearly a lot of responsibility on investors there as well to engage with companies, and that echoes what Sharan was saying. Myriam, can I ask you to talk a little bit about your view on what we need for a just transition?
Thank you very much. There are already some elements that have been clearly outlined, so I just want to support them. But basically, if you take them like a step back, it's about sharing the burden and the opportunities of what is going to happen in the transition. And I will talk a bit about that. But also, I think what we also have to think about, it's also sharing the decision making, yeah? Because if it's all kind of the investors who have to decide, it's something else. And it reminded me this morning when Mr. Garçon was saying, well, you know, we just looked at stability. Actually, in 2010, we already gave advice to the Basel Committee and the Commission, because we had some NGOs really scraping some money together to say you have to have and to develop your ESG risk assessment in your weighing. So you can look at it, it's still on the website, I think, on the 2010. So in that sense, if they would have listened more, then it would already, I mean, it would have been there and already in their thinking. And now we have the kind of perspective of stranded assets. By the way, we shouldn't think about stranded assets only in climate-related issues. There's also social stranded assets which have to be taken into account. So I would say, yes, we have to make sure that those who are affected have been taken into account and that is being dealt with. I would also say what I'm kind of concerned about is that the huge profits in the financial sector have been possible because there was a lot of externalities. So they externalized the social costs. You know, some of the profits, I mean, we are at SOMO looking at a lot of companies, and one of my publications are there as well. If you look how much the investors are then investing in companies which are for years being documented, and that's the palm oil companies, to have destructive social impact, they still invest in it and they still get profit out of it because they are not taking responsibility, they're not engaging because they have very small parts, but still they're able to get the profits. They could have looked at it, or they can do it better even now, when they really look at what the impact is of those companies. But that costs money. You know, it's not only so developing the taxonomies is fine, but you have to really kind of, as was said this morning, to look at each of the projects. And that means, as an investor, you will have to put some more money into it. And there I see a reluctance to do so, which I'm quite concerned about, because we shouldn't have kind of a way where society is saying, well, you know, after all this deregulation is a huge amount of money in private hands, and to be able to get it, we now have to give them guarantees and subsidies and so on. So there has to be a responsibility also to say, well, the externalities have to be internalized and has a cost. And I think that's a message which is still quite difficult to deal with. So at the same time, I think the opportunities were there, or the willingness also for people to be involved have to be taken into account. So that means also that people want to know much more about the pension funds, what is happening in there, when they have savings. So it's not only about investment, we still have risks, I think. So I think even the Pan-European pension fund, Pan-European personal pension fund proposal has to be very careful on how it's going to invest the money and ask people to get their savings into investment. But how are they going to be sure that this investment is going to be supporting a just transition? But also, for instance, if people just want to save, there should be kind of in the banking sector quite a lot of measures that should be taken whereby people feel that their savings is also going to be used in a way that they feel it's about the transition. And just one thing that is what needs to be developed, and I think that was being said, we have to see what does the SDGs mean for Europe. There are some particular issues. I mean, the inequality issue is a particular issue, and as we know, like in the US, it's also to support the transition. If we want to have, for instance, sustainable agriculture, we have to make sure that everybody has a wage so that they can pay, I mean, for instance, biological agricultural products. Of course, they also need to have the basic housing, good education, health, and so on. But at least kind of that needs to be there. This inequality needs to be tackled because everybody has to have the capacity to refurbish their house and to contribute to the transition. So I just want to end with one thing I think which is not being covered is, you know, how are we making sure that society has a better say to investors on how they should orient them? And that means I'm talking about the decision making on regulation. It's extremely difficult for having the civil society's voice to be heard, and there's a huge dominance of the lobby who are looking at their interests from a short-term perspective. And I think that's something we have to kind of raise as well. Thank you.
Thank you, Myriam. A few things there. Purchasing power, enabling people to have enough purchasing power to actually engage in this transition on an individual level, civil society engagement on the regulatory level, and also retail banking. That brings me nicely on to Andrea. Can you shed some light on the banking piece of this puzzle, if you can? Thank you.
Yeah, thanks, and I'll start from several things that had been said already in the previous intervention, and I would say that what we need from a financial banking point of view for a just transition is huge needs of capital, and maybe what strikes me more is that there's never been so much money in the world. Italian sovereign bonds have a negative rate of return. Literally, investors do not know where to put their money, and on the other hand, we say we desperately need huge capitals for the just transition, for keeping together, et cetera, et cetera. So I think it's really a Finance Watch slogan, making finance serve society, because we have huge amounts of money on one hand, huge needs on the other, and if they do not meet, it's the most impressive failure of modern time, and that is the current definition of a big chunk of finance. So I would say maybe the approach we have is already has been said in several interventions, keeping together ESG, the three parts of it, or whatever we want to, in which term we want to say it, is the idea of just transition, the idea of sustainable finance. Sustainable finance is about climate, is about environment, but it's much more than that. It's long-term investment, is about financial stability, is about speculation, is about workers' rights, about human rights, and we must keep together all these dimensions, because really in a couple of minutes, but what I'd like to say, regarding the debate on sustainable finance, as civil society, as NGO community, I would say we had a great victory on the one hand and we risk a defeat on the other. Because up until a few years ago, nobody on the financial industry would talk about sustainability. Now, everybody talks about sustainability, but we need to be very careful about the definition. I mean, financial industry is very pragmatic, not to say the initiative regarding greenwashing or marketing or what it was. So when the sustainability debate arrived in the financial community, it was more about internal impact. So I use recycled paper and I'm sustainable. And it does not matter if I do finance coal, nuclear, weapons or whatever, I'm sustainable because I use recycled paper. Then we managed somehow to get rid of it. And it became, okay, sustainable investment, you just have to exclude something from your portfolio. So I hate microphone producers. My idea of sustainability is to exclude microphone producers, and any other thing would fit inside my investment fund. And that is my definition of sustainability, and nobody can put a critique or put it different. And we still have to defeat this view. Now we have even another risk, that it is that today, to build a low carbon, a green fund, all I have to do is just to underweight my portfolio with respect to a benchmark that I can fix myself. I try to explain in 30 seconds and then I close. I put out an investment fund and I say my benchmark is Standard & Poor's 500. And in the Standard & Poor's 500 index, the coal industry and the fossil fuel industry accounts for 20% of the portfolio. I build an investment fund where coal and fossil fuel is just 19.9%. So I have underweighted my fund with respect to a benchmark that I gave myself. And so I am green fund, low carbon fund, sustainable finance, or whatever we want to say. So just to conclude very rapidly, what I say is we are managing somehow to shift the debate, but the risk is that the financial industry itself is very good in shifting the debate. So it's kind of a race to who arrives first. So I think our task in the coming months, in the coming years, will be, yes, on technical legal duties, etc., but it's just as much important, or maybe even more important, a cultural, a financial education, a political work that we have to do to fix strict criteria, to work on transparency, to work on disclosure, to really have an overarching approach, an overall view on sustainable finance, that it is sustainable finance, it's not green finance, it is not greenwashing finance, and it's, I think, the major risk we have to face today. Thanks.
So that was a real pit stop tour of everything that we need to deal with to manage the future of the world. I have a million questions I'd like to ask, but actually I've been told we're supposed to wrap up, but I would like to just put out questions from the floor quickly and see if anyone has any. Peter?
So I just wanted to know, perhaps the panel would have a view on this. I was just toying with ideas as to how we might accelerate this discussion with companies. Imagine a situation where the campaigners in this room convinced companies that every set of annual accounts needed to have a statement written in the back that said, we, the board of directors, warrant and represent that our firm is not knowingly unjust. So, in other words, lawyers would have to pore over that statement to discover what that meant legally, but that would be a legal commitment. That would allow people and entities to whom injustice were wrought to use suing and other mechanisms to exact compensation from companies. So just wondering what your thoughts are on that.
So, yeah, go on.
I think maybe you know that in France we started more than 15 years ago to have a legal framework for reporting. The main point is we have a lot of pages or data to explain how they do good or maybe just, but there is really difficulties to understand the way of it's helpful to change really things. And Andrea is absolutely right. The point is, how far do we want some change, and how far it's possible that financial industry could claim this change, because they are built, they are not the kind of actors you are, as NGOs, for example. So that's a very strong issue, and how far, maybe it's one of the main points for next week in Paris, with One Planet Summit on over events, is the next step after Paris Agreement is how far could governments and over leaders to be serious about the way of legal aspects or responsible aspects, and you are absolutely right, we need to put boards on board to have strong conviction that we need to move faster and to make this transition very concrete. And we are on a good place. We publish survey by survey since more than 15 years to see that we are now at a point, we have something, but we really have to change the bands. We really have to change the culture, the capacity of what is good or not, what is dangerous or not, what is the good energy or not, how could we save jobs, because I think really they try to do that, but they really don't maybe address the good points. And I was really shocked by the French campaign about politics this year, because all the topics discussed were really far away from all the things we are discussing. We were in the 80s, and I was born during the 80s, so I remember. And I was surprised, because I say, if we have the kind of politician, and it's not an issue of left or right, if we have politicians who are talking about a world which is still dead, what could we do? And I think, and I hope, maybe I will be disappointed, but everybody that will come in Paris next week has the hope that we can have this kind of conversation. And finance is just a tool. The question is how we use this tool and which kind of purpose are the leaders on the economic side, on the political side, and so on.
Thank you, Christine. Just 30 seconds from any other panelists on this question, otherwise I'm going to get in trouble. Sharan, I'll start with you, and then Myriam.
Okay, three things. First of all, France has a due diligence law. It's mandated. We need it in every country in the world. Secondly, we're working with a group of 5 of the largest global companies to actually get the just transition measures in their business planning. They've already committed to net zero. Let's take your principle and make it happen. And the third is, let's sue the... starts with B, the responsible folk. In the Philippines, we have a Greenpeace union joint approach through the Human Rights Commission on the big fossil fuel companies. I think Shell's the lead person. And let's do that everywhere. I mean, it's not even that we want their money, frankly. We want them to stop. We just want them to stop. And if they're not prepared to change, then, of course, we want them out of business.
Great. Myriam?
I would add, and investors, do you want to support us, as a question? And I think there are legal, I mean, the OECD national contact points are a way to do it. But I think the whole legal system of non-liability through the structures of the companies, they're willingly doing so. So that would be one issue.
Fantastic. Andrea, anything to add? No? Okay, well, all that's left for me to do is say thank you to the audience and thank you to our panelists for that really interesting debate.